Yo, what is good, guys? It's BGFX. Welcome back to the channel. Salute to all you guys watching. Hope you guys are all doing good today. Today, what I wanted to talk about is how do you get better entries trading Forex. So we're gonna overall be looking at USD. AUD USD, and we're gonna dive into a few different strategies on how you can get better entries, exits, and overall profit from the markets like a sniper. So without further ado, hope you guys enjoy this video. Let's dive into it. Peace. Currently got AUD USD thrown up on the 1 hour time frame. I got a couple of zones drawn out on the chart right here. You can see this middle supply demand level, support resistance, whatever you want to call it, and then we also have a previous level right here that I got drawn out on the chart. And this is just basic support resistance, but we're gonna get into some of the things that would have allowed you to get a sniper entry in this market. So basically, we got moving average indicator on here, and that is going to be the 20 to 50, the 100, and the 200 EMA. That is what we're going to use in terms of indicators. Besides that, we're going to be looking at this trade purely based off of price action. So real quick, before I get into it, the trade was a 1 to 3.25. All right, so a 1 to 3, a little bit more than that as a risk to reward ratio, which basically means if you were to risk 2%, you can potentially gain 6.5% of your account for this one trade. So overall, real nice trade, real clean setup. Let's dive into everything. All right, starting off on a little bit higher time frame. When it comes to day trading, I'm looking at the 1 hour time frame right now. And the thing I noticed is you could bring your trend line and you can drag it all the way up here. Now we notice, if we look at when the beginning of this trend line began to form, we noticed we had a touch of the trend line. We had push up to this level of structure. All right, we had a push up to this level of structure. Now what happens around this level of structure? We see the candle open up as bullish, we see rejection, and then we see a second form of rejection, and that candle closes as bearish, and then we see another rejection candle all the way down at this support resistance here, and then we see another push down, and now this small pullback is just a second touch of this trend line. Alright, so now what is happening is we see another form of rejection around this level, and then we see another small pullback, which makes a third touch of the trend line. So that is how our trend line initially formed. You could bring the support resistance a little bit more back here just to see how price acted with it. Okay, and then we see a breakout, and then we see a pullback. Now, let's see. Now this is the fourth touch of the trend line. Eventually we see rejection up to this middle level, and if you look close to this level, I want you guys to realize something. This level, the wicks and the price movement is very slow every time price approaches it. Now I'm sure you may have heard the quicker price moves off the support resistance, the more powerful it is, but in every case that's not 100% true. If you look right here at AUD USD, the movement is so slow, but overall that slow movement is showing us that no breakouts are going to happen anytime soon, until multiple occasions we get rejection, and then we see a breakout, and then a minor pullback, then a continuation, and price eventually finds this level here. Okay, so what overall I'm looking at in terms of me catching this buy for a nice potential bullish move is I want to see some type of double confirmation. I don't want to just see one form of confirmation, because if you look at one form, you'll see that nothing major really happened. So you can see we got one trend line bounce of a small amount of pips, pull back, second trend line bounce, a small amount of pips, finally a breakout, and then we see a fourth touch, a fifth touch, eventually the sixth touch. Now what is special about this touch right here? The special thing about this is that, first of all, of course, this double little tweezer bottom rejection formation here, but what I noticed is that not only is this a key level of support resistance, it is also in confluence with the fact that we have a trend line. So if you notice here, price touches the support, rejects, goes up to the top, and bounces off. Nothing major happens, okay? If you look at this 6 touch, you notice that the same thing happened. Price touched a very similar level, except this time price was also on this longer term, not super long term, being on a 1 hour time frame. But in this time, it is double confirmation. All right, double confirmation leads to a much stronger breakout in these market circumstances here that we're looking at. So overall, you guys can see that the patience is literally what will set you up for the best possible move in this market. All right, now let's go down to the 5-minute time frame, and we're gonna see how we would have been able to catch a nice move on this pair. So let me get my eraser out. I just want to erase all these arrows and shit that I drew out. All right. Okay, so this should be good. All right. Overall, we look at this market structure here. We see that, you know, trend lines are broken and the overall movement of the market is up. How do I know that? Because you could bring the charts all the way back. You see this low, major push, then another pullback, major push, then another pullback, and then a major continuation. So let me show you guys why I would have entered right here. First of all, of course, it's on this trend line. Second reason, we have support resistance. Third reason, okay, we're gonna start analyzing these candlesticks and we're gonna see what the market movement was looking like and what the price action was looking like. So look, I'm gonna get a trend line, and what I see happening here is this small channel being formed to the downside. The channel was initially started at the top up here. So what we see happen is price push up to this, break, retest, and price is overall making higher highs. So if you look at this beginning of this upper movement, you see this low, you see price push up, you see price make a higher low than before. Okay, and then you see it push up again and make a higher low than before. So once we see the breakout, of course, another higher low than before. So now what I want to see happen is this descending channel, I want to see it broken. Now the reason I want to see it broken is because when price is in this descending zone, what does that tell us? That tells us that sellers are in control of the market. So in order for me to see some type of confirmation, I want to see price break out. All right, I want to see a breakout of this level when it is tested by this previous support resistance. So another thing I did was I drew out this very small level. You see we have a tweezer top rejection, and then we see another push up, and we see another very strong rejection off this zone. So in order for me to buy this trade with the highest chance of profits, I want to wait for price to break out and then pull back. Now in the midst of this breakout, we notice an ascending trend line forming. So not only do we have downside movement of this channel, we then have a breakout, and we also have a third touch of a trend line. All right, so overall, guys, you can see how the market responds to these levels of structure. In my opinion, it is strictly about patience, you know, strictly about realizing when the markets will do this, and overall seeing how these formations occur. So look, support resistance, the initial direction of the market is being tested. We see a breakout. What now? We got our support resistance here. We then have a break of that. Now once I see the break of this, I then want to see a pull back down to market structure, and then I'll be looking for my entry. So how do I look for the right entry? I'm going to take out my Fibonacci, and I'm going to look for the lowest point, which will be right here at the bottom of this wick, and then I'm going to bring it up to the highest point, which will be right here. But I'm going to bring it out, extend it a little bit just so you can see, and you'll see that price makes a pullback all the way down to the 618 level. So in this case, the 618 is where we'd be entering. Why the 618? The Fibonacci tools measures your reversals or continuations when it comes to pullback. So in my specific well, in this video, I could say the 618 entry is where we're gonna look to enter. And not only is it a 618, we realize that this ascending trend line begins to form, and then we see a fourth touch of it combined with 618, combined with the fact that this descending area of market structure has been broke, combined with the fact that this extra level of market structure has been broke. So a lot of confluence on this trade, combined with the fact that long-term ascendant trend line is respected. So this is how you catch sniper entries, because a lot of people have been telling me that they enter the markets and sometimes they may be unsure of where they should be actually getting in at, and if they're doing it right. So I just wanted to make this video. We're taking price up to the 618. The reason for this is because 618 is going to be the exit zone for the Fibonacci, and then it'll be 618 combined with this previous high here, which also is acting as a resistance level. So all in all, it definitely makes sense to take price up to this level. You could even extend your trend line, and we see another touch. And these are areas where you could potentially scale into your positions at. What I mean by scaling is doubling down, adding a little bit more risk to your trade. And realize I said a little bit, never expanding a huge amount in these trades just because you're in profit. You always want to be smart about it. So you could also probably draw something like this as well, and then you'll see like a breakout. And then we get a pullback to the top of this zone. All right, now this is another example of how you can capitalize on continuations of a trend. This is a breakout trade. So you can potentially enter on this pullback. The one thing I like about this is that if we look at the EMAs, we see a breakout of a significant level of structure, and then we see prices above every single EMA. So what does that mean? That means that the momentum of the market is very, very strong if it is above the 20, the 50, the 100, and the 200. So that's what that is telling us overall. Eventually, up here, we see support resistance. Once again, we see support resistance, and overall, that looks very nice as well. And we can eventually see another breakout of this high here. Okay, price makes another high, rejects, takes its time, and then eventually breaks out again. So I'm going to show you how you can capitalize on this opportunity here. All right, we see prices above every single EMA, which is a sign that the momentum is very strong. Once again, you can click your Fibonacci from the top to the bottom, and look for that area around the 618. You can enter here, stop loss below these lows, and this is another trade. You potentially very close. You basically can say that hit TP. That's like half a pip, if that, from hit and take profit. So obviously you can see that this trade was a very good one with literally no drawdown. And if you look here, okay, what's our confluence on this trade? What is our reason? All right, prices above every single EMA. Price has broke above significant level of structure. Price has pulled back to the 618 Fibonacci zone. Price has also formed a tweezer bottom, which is a candlestick pattern for a continuation or a reversal, depending on what type of market structure you're looking at. So overall, guys, you can see that when you add these pieces of knowledge to your trade, and your trading becomes very, very powerful. And it is definitely something I recommend. Learn how to use Fibonacci, learn the power of moving averages, learn support resistance. I've heard a lot of people say technical analysis doesn't work. Honestly, man, there's many different methods that you're gonna come across when it comes to trading. Some people believe it doesn't. Some people believe it does. I know for a fact that it works for me. It may not work for the next person around the corner. They might think that fundamentals and news is a better way to trade. All right, so it really all depends on finding what works best for you. In my opinion, I'm not going to say what I do is going to work for everybody, but in my opinion, when it comes to my style of trading, this is very extremely profitable, and it's crucial to success when it comes to trading. So overall, this looks very good. When it comes to overall what type of move you could have caught here, if you would have brought stops to break even, you could have potentially caught like a 1 to 12 risk to reward ratio, which is extremely good, regardless of what type of trader you are. Extremely good. You could have took this up to whatever level. You could have closed out a little bit of your position as you moved on. Me personally, sometimes I'll scale out, sometimes I'll scale in, which basically means closing a little bit in profits or adding a little bit more when I see things add up. So it's really just all about being adaptable to the markets and being adaptable to what you see, and not completely eliminating your emotions, but being in control of your emotions. Being in control is key. All right, you never want to let your emotions drive your decisions when it comes to trading. You definitely want to trade what you see, and just make sure that you're in control of your actions and you make each action with definite purpose when it comes to trading. So overall, guys, I just wanted to post this video. It's been a few days since I posted here on YouTube for you guys. I just wanted to break down market structure. I want to show you guys how to get into the markets at the right time. I know this is a very short video. I don't want to make this video extremely long. So real quick, I'll just say if you want to get my full education, I got a link in the description. If you want to get access to the Forex Bible, which is my ebook that focuses around shifting your mindset to a professional trader, then that is $10. Literally like a meal from some fast food place. Definitely worth the investment. Anyone who has got tapped into the book has very well said that it is worth it. That's pretty much all I got to say for you guys. You want to get tapped into the ebook, hit the link below. If you want to get tapped into the academy and get my full mentorship, that link is also below. One more quick announcement. I don't know how many of you guys are watching right now, but my Signal group is going to be releasing very, very soon. And by soon, I mean within the next 2 to 3 weeks tops. In the group, I'm going to be manually sending out signals for every single trade I take. And also, I'm going to have a robot that will be trading for me at the same time. And that AI will also be sending out signals as well. So I've been working on this robot with a software developer of mine for the last 2 or 3 months. And hopefully within the next couple weeks, that'll all be finished. We can get everything set up for you guys. So without further ado, it's been your boy BGFX. Salute to all you guys for watching. I hope y'all enjoyed this video. Just wanted to do a little breakdown on RUSD. Hope you guys have a great rest of your day. It's been your boy BGFX. I'm out. Peace.